Good evening. This is Michael Folagero with the Logical Signals Elliott Wave update for the NASDAQ 100 future, the NQ, for Tuesday, March 16th, 2021. I quickly want to jump into back on our hourly chart, where again, we continue to trace and track the decline from the top of cycle wave 3 in the NASDAQ, which was at 13,900.50. And originally I was feeling that the market would unfold in an 3 waves of primary degree to complete the cycle wave 4, which is now in force, and that within each of those primary waves, I had felt that the A wave would take the shape of 5 waves down. That now does not seem to be the case, and the market continues to basically tell us that wave A, again, in and of itself, was an ABC decline down. And that doesn't necessarily change the overall corrective, but it does change the structure of this correction. We're still in need and going to follow through on the correction, but it now is taking a little bit different of a shape, and that opens up greater possibilities of how the whole larger structure will unfold. So if to just reiterate, from the 13,950 high, I have now counted down 5 waves for a minor wave A, and then the 3-wave minor wave B, and then an additional 5-wave decline for a minor wave C to complete intermediate wave A. What that then suggests is that we are now in the process of working through a intermediate B wave rally, and within that there's going to be an A, a B, and a C. And so I'm pretty satisfied with the A wave and the B wave, which sets us up for this C wave rally. Now, originally we had placed this as a minor wave 1 of an intermediate wave 3, which was pointing down. But with this addition of this rally that we've had, and again, very intense this morning right off the bat, did push us above a level that I felt the market should not break. Although it didn't break this upper level, I now need to leave open that possibility. And from what I can see, very much the likelihood that that is likely where we're going to end up. However, let's just update where we are right now. If I'm counting a C wave, C waves are always going to be a 5-wave structure. So that's why I've left this all open, because it gets very sloppy in certain areas. So I have to let it develop more so that I know where I'm going to place wave 1, wave 3, wave 5, and also 2 and 4 for that matter. Now, I do have the possibility that I could count this complete at this level. So that way I could put a C there and then put an intermediate B wave above. But I feel that I need to let that kind of just really unfold a little bit more before I get a little too hasty. And I'll tell you why I can count it that way. First, I want to just go over, this is the Fibonacci retracement levels, and that is off of that high at 13,000. This is actually coming at 901 instead of 900.50. Down to this low. So this would be the Fibonacci levels, which you should find resistance as the market continues to trace out the B wave. So right now it has already reached a 62% retracement of that initial decline, and then it turned lower pretty much right off of that level. It got above it today, but then traded back below it and ended up closing below it, so it keeps it in place. But because we've not really started to break down further, and on this hourly chart, I can't really discern a 5-wave structure down just yet. But if we have continued breakdown, I'm sure that will fall into place. However, we need to leave open that the market can yet again turn around, rally back up, and rally up towards this 13,400 level. And that is also very much still alive and would fit in, again, a B wave advance off of that initial decline and set the stage for a C wave decline, which would then finish the first primary wave A of that larger cycle wave 4. So we have plenty of correction left, but we're trying to allow the market to tell us what it is doing. So we're taking our clues from the market, and we continue to trade each day based on what's in front of us and where our Fibonacci's and where the moving averages are. So regardless if it continues to rally, goes back above 13,255 and on its way up to 13,400, perfect. We have our moving averages in line, and we have our Fibonacci's to continue to guide us as to where resistance should be found. Now, I also ran Fibonacci extensions, and I'll go ahead and run them again so that I can just show you. And that's going to be from this, oh, come on, this low. Nope, you didn't like that. Okay, can we try that again, please? Come on. There you go. Up to here. And then I'm going to connect it to there. And you can see that a top level, 1.705% retracement of the A wave now was breached but came back down below. So not only did it hit the 62%, but it actually kind of went to the top rung of where it would likely come in if it was just being based on the A wave and the B and the C. One of the very common is 1.618 times wave A, and then 2.0 times wave A, which is likely going to be right there. So it does fit, and it continues to hold within a pattern that is acceptable. So if indeed this completed it, as I suggested it may, then we should begin to see it start to drop pretty steadily as a C wave down comes into play. And once that C wave begins, it's going to break down into its own 5 waves of minor degree. So again, similar to what we have now seen, these are the minor coming off, and but it's going to be a minor 5 wave because all C waves are 5. And that would then take us down to, if indeed that today's high finished it, the first most common relationship is that wave C, wave A to wave C, because those are two related, that a C wave could be equal in length to wave A. Well, this wave A down to here was 1,693 points. So if I take this high today, and which was 13,283.50, and I subtract 1693, it comes out to 11,594. That would be where we would first look for wave C, an intermediate C wave, to complete. You can see that's quite a bit of downside laying out in front of us, if that indeed was the high. So wherever this does finish off, whether it's here or whether we rally up to here, or we continue to rally even higher, we're still going to use that same functionality of the relationship between wave A and C. Now, the second most common is that wave C will equal 1.618 times wave A. And that's going to bring that level down quite a bit more. And if I do the quick Fibonacci's on that, if I look at 1693, we'll say, times 1.618, and that's going to equal 2,739. And then we take that off of that level. So it'll be 2,739, and we're going to go back to 13,283, I believe it was. Got up pretty high today. Yeah. 287.25. 13,287.25 minus 2,793. So now we're down to 10,494. So we have lots of downside in front of us, and we'll be tracking that as it happens. But right now, we need to complete wave B. And again, remember, then the C wave down is just going to complete the primary wave A. So we'll still have a B wave rally and another C wave decline. So at least we're going to follow the same corrective pattern that these are ABC structures. We should have an ABC structure down, a C wave, phi wave down for C, and then an ABC type structure for a B wave. Now, I'm pretty confident in that we do have continued correction coming. The euphoria that's kind of surrounding the markets lately is based on a lot of news that's kind of hit, but I think the market tends to get out in front of itself in terms of how much positivity we really should be injecting. But again, this morning, we saw some intense money coming into the market. At least it was my observation. There was a lot of intense buying in that first hour. And if I can just, in fact, let me just go over to the other charts and open this guy up, and then we're going to look at it. That was the opening. It just opened basically down here, and it just rallied. And then within the second hour, it rallied again, reaching its high. And then immediately in the third hour, just third, the fourth, the fifth, and the sixth hour, it just sold off. Had a little bit of rally into the close, and that was it. And now we're selling off again. Not massively, but we're selling off. So when I see the markets just really sell off as intensively as they did, obviously the buying was done. We didn't see any buying coming at the end of the day. So maybe everybody who needs to be in is in. I'm not sure. We're going to leave open the possibility we'll get more. But it does lead me to believe it's like, well, that could be it for now. And those that want to be long are long, and they've come into the market, but you'll see again tomorrow as money gets allocated again. So where am I going to leave this? I continue to trade what's in front of me. I want to make sure that that's clear, because even though we rallied and we rallied intensely today, and then we declined, and we declined with intensity today, both were extremely tradable, very tradable, and not difficult to kind of hang on or reach for larger profits on each individual trade. Why I say that we trade both directions is that we trade what's in front of us is because we're not going to be married to an idea that the market has to go up. We're not married to an idea that the market has to go down. We let the market tell us what it's doing. And then when it goes up as it did, we're there. Now, it may have, and we could have internal resistance points, in which case we are figuring out where we're going to top out, and then we can put trades into place. But we're also going to be watching on our shorter term charts for when it begins to break down through those moving averages, and then we can add to trades, or we can build our trades around what again is in front of us. So that's why I will trade off of a 2-minute, a 5-minute, and I have a 1-minute chart on NinjaTrader, which is where I actually do my trading. So these are very nice declines, and the rallies were also very good, very tradable, and not the most easiest thing to kind of look and say, but when you're trading, you just, I'm buying this and I'm going to hang on to it, and I'm going to buy 2 or however many contracts and work one and trade one, and et cetera, until you reach the levels where you might get a turn. But profitable trading again today. So let's leave it there. Tomorrow, what we're going to be looking for, we're ready. If it continues to decline again on the hourly, we're looking for it to break below the 50, then the 100, but more importantly, the 200. If it starts to break below the 200, then we're going to consider that the B wave is done. And we'll throw an intermediate B up here. An intermediate C is beginning to unfold, and it's going to unfold in its own 5-wave decline. If the market continues to rally back up and our moving averages return to being all in alignment, which basically right now they're not, but that would state that the 50 is above the 200, the 20 is above the 50, and the 8 is above the 20, and they're all pointing in the same direction. In this case, they'd be pointing up as they were this morning, which led us to this beautiful rally. It was clear as day. It's going to rally. In fact, that's how I left it last night, saying all of the moving averages are pointing in the same direction, and they're all in alignment for this market to rally higher, and that's exactly what it did. We started to then, when they turned, we can see that now on our 2-minute, they're aligned to go down. And they're getting there in terms of the 5-minute. But being that they're that short term, they can turn pretty quickly as well. The hourly, it's a lot bigger boat. It's going to take a while to turn that boat around. So we know what we've got planned. We know where it's going to start to break, which will give us confirmation of direction going up and down. And we'll be looking for our moving averages to begin to become in alignment with one another, to show that the move itself is going to pick up some intensity. It's going to pick up some speed in the direction that those moving averages are telling you. And that's where we're going to leave it. Have a good night. Next update tomorrow, Wednesday, the 17th.